Hello, I'm Katie Pilbeam and this is Venture Capital. Another week and another historical low for oil. What next? And sticking with weekly themes, another banking price fixing scandal. When will they stop? Plus, competition in the gas market is heating up. Retailer New Look looks elsewhere. And one of the world's most famous star economists, Jim O'Neill, he talks to us. But first, oil, it has hit another fresh low, with Brent now below $80 a barrel. Now, weak Chinese data is the latest reason for the drop, added to a very long list of reasons. We've got the continued slowdown in the Eurozone, US shale gas production, OPEC staying stubborn on their production, the surprising recovery of the Libyan oil industry, the end of the US stimulus program, and the ongoing slump in Japan. So there's a lot of reasons why it is declining. For more on oil woes, I'm now joined by Alexander Nazarov, Director of Market Research from Gazprom Bank. Hi, Alexander. Now, there's lots of reasons why the price of oil is going down. And this week, the latest reason was because of China's production data disappointing. How much can China influence the price of oil then?
Largely, I would say, China is the main driver for growth for the world economy and, of course, for oil consumption. But interesting enough, at the same time, oil import from China last month likely was record for the last several years because oil price is low. So China, despite the low production volumes growth, is consuming oil faster and faster.
And what do you think Saudi Arabia is up to at the moment? Do you think that they will agree to reduce their production in Vienna later this month? What are the chances of them agreeing to do that?
Well, taking into account current oil price trend, it is very likely they have to do something, because if the oil will go down another, let's say, 7 to 8% next 2 weeks before the meeting in Vienna at the end of this month, it is very likely that even Saudi Arabia's budget will not be balanced next year under current oil prices, and that will push them to do something to sustain oil price.
Mm-hmm. And Alexander, it almost seems like there's a game of chicken going on at the moment, because Saudi Arabia want other OPEC members to also reduce production. It's going to be tricky, isn't it?
Absolutely, absolutely, I agree with you, because unlikely Saudi Arabia and some of other Persian Gulf oil exporters, smaller countries like Venezuela or Libya, has no other inflows of foreign currency into a country other than oil export. And for them, at current oil price, it's a question of survival to produce and export as much as possible at any oil price.
Okay, Alexander Nazarov talking to us in Moscow from Gazprom Bank. Thank you. And staying with oil, the former chairman of Goldman Sachs Asset Management and the man behind the BRICS title, Jim O'Neill, told us his projections for the future of oil.
I thought 3 years ago that oil prices had peaked and they'd go down to $80 a barrel, which is where we kind of broadly are today. I think we might have some more weakness coming in the next couple of months just because of the sheer momentum. But I think we're probably not far off most of the decline. When you get moving towards $70 a barrel, a lot of the alternative energies start to become less economical, and the supply problems in those areas start to grow. So I think there'll be some kind of self-correcting mechanism at some stage, and I think we're probably closer to the bottom of this move rather than the beginning of a sustained slide from here.
Staying with energy then, the strengthening of Russia and China's energy ties is putting pressure on global natural gas giants elsewhere in the world, especially in Australia and Canada. Now, the second deal struck in Beijing at the weekend involves a Western pipeline from Russia to China. This is on top of the $400 billion agreement struck in May, which together will make China the largest consumer of Russian gas. Now, according to consulting group Trizen International, US, Canadian and Australian LNG companies are already suffering due to the increase in competition. So I'm now joined by Craig Erlam from our Parry in London to chat about all of this in more detail. Hi, Craig. So how worried should these US, Canadian and Australian companies be about increased competition from Russia and less demand from China then?
Well, of course, I think these countries are going to be a little bit concerned, especially when we're talking about China, who consumes so much energy in the global market. It's such an important country for these exporters. But I think what we've got to realise here is this isn't just about the countries and the companies within these countries. It's all about competition, and competition is always good for the markets, and it's especially good for the consumer of that final resource. So I think while of course, these countries are going to be a little bit concerned. They're going to have to find ways to make these prices cheaper and find ways to increase their competitiveness with Russia. I think overall it is a good thing. And like I said, we've seen in the past with oil, the increased competition is always good for the market. So I think for us as consumers, I think we've got to look at this as a positive.
And I want to talk about sanctions, because we're talking about energy deals, because they've once again been threatened by Europe, by Germany in particular, against Russia. If we do have them on the energy industry, how might that transpire?
If I'm honest, I don't see the threat of sanctions on the energy industry being a reality at the moment. At the end of the day, as you've highlighted, Germany is extremely reliant on Russian energy. So in order to, if they were going to impose sanctions on Russian energy, then it's going to hurt their economy just as much, if not more, than the Russian economy, at a time when the German economy itself is already extremely fragile. We've only just seen today that the German economy's narrowly avoided recession, and it just can't take higher energy prices at this moment in time. So I think while the threat of these sanctions remains there, and it's there to try and influence the Kremlin's decision making, I don't think this is a realistic outcome, because it's just going to hurt the economy far too much. Maybe going forward, when we get these higher supplies of energy and therefore lower prices, so there's other offers on the table for Germany, then we could potentially see sanctions being imposed on the energy industry. But at that point, when you've got things like this China deal in place, maybe it'll hurt the Kremlin less and therefore won't dissuade them quite as much. So I think right now the chances of sanctions on the energy industry, taking all that into consideration, in my view, just isn't realistic.
OK, Craig, thank you so much indeed. Craig Earlham from Apabila joining us in London today. Much appreciated. 6 major banks were fined a total of over $4 billion by international regulators for failing to stop their traders manipulating the foreign exchange market. HSBC, RBS, JP Morgan, Citigroup, UBS and Bank of America have all been punished for sharing confidential client information and organising trades to boost their own profits. Now, London is the global hub for forex trading, so we're going to head there right now and gauge the reaction to such fines with Mark Priest from ETX Capital. What happens now? Because can the trust ever be reinstalled?
Yeah, I think it can. I mean, I think people in the market understand that the foreign exchange market has historically always been an OTC market. I think it's always managed to be sort of underneath the regulation radar. And I think people are confident now that the regulators are keeping a close eye on it, and things will have to be transacted above board and be monitored by the regulators. And I think that's going to be a good thing in the long run.
I think some people think, though, 5 years on from the financial crisis, we're still having these cases coming up. And one would say perhaps it's just not good enough.
Yeah, I think it goes back to the problem that the foreign exchange market's been a bit of a sort of Wild West for a while, and I think they have sort of got away with almost what some people would call daylight robbery. But I think, because of 2008 and because of the tightening of regulations and from the watchdogs, it was inevitable that other things would emerge. So I think it's a bit of a case of sort of, getting things in order and tidying things up. So hopefully, in the years going forward, these scandals will just become a thing consigned to the past.
Thank you, Mark Priest, for talking to me from ETX Markets. Certainly appreciate that. Corporate news time now then, and we're going to start with one of my favourite fashion stores. Yeah, New Look is planning to leave Russia and Ukraine. The British fashion chain's decision is reportedly due to political uncertainty. This decision comes just as the company announced an almost doubling of its first half pre-tax profit. Russia's Rosatom has agreed to build up to 8 nuclear reactors in Iran. The deals will promote the peaceful application of atomic energy between the countries. Among the documents was a contract to add 2 more units with pressurized water reactors to the Bashir plant in Iran. And staying with power then, one of the world's most powerful hydroelectric power plants has resumed operations to provide energy across Siberia for the next 40 years. Russia's Sayano-Shushenskaya was damaged in an accident 5 years ago, and the tragedy claimed 75 lives. OK, change of tune now. Let's go to Tim Kirby on the business desk. It was Kiwi last week, wasn't it?
Yeah.
What happened?
Yeah. I'm looking at the beautiful Kiwi logo, Katie, and yet the logo did not help. They went down, their value went down 1%, so I lost $276. That's not that much, but it's still kind of disheartening, you know.
Still down.
Yeah, and you know what also, in financial news, let me spin the wheel here and see what we're going to invest in. In financial news, on a personal level, boy, the inflation of the ruble is biting me. You know, I still have a lot of college loans to pay off that I'll be paying off for the rest of my life. And they're getting more expensive by the day. The Mail.ru Group, which we have had before, which makes various amounts of browser, telephone, various different types of computer games, and they have various other Google-like services as well. So we'll see how that plays.
Fingers in lots of pies or fingers in lots of letters?
Well, yeah, and also remember, Katie, the last time there was the 2008 crisis, actually video games in Russia fared very well because a lot of people who lost their jobs sat at home and spent their last remaining rubles on magic swords to fight dragons. So who knows? Who knows?
That sounds quite depressing, but all right, Tim Kirby, I've got
if you want to
faith
kill
in you.
dragons.
And also Christmas is coming up as well, so people use the post a lot, don't they?
That is true.
Sending presents and cards and all sorts. All right, Tim Kirby, good luck.
Good luck.
Mail.ru then. We will see what's going to happen next week. He does need more money because Christmas is coming up. Lots of presents to buy. You can join me next week to find out if he did gain, and you can stay tuned to RT. More news updates coming up.